Hey everyone, this is Dr. Tom Gerard, and this is going to be a quick introduction to Chapter 5. Chapter 5 is the retail. So, think about retail. Well, first of all, let's just look at these, what you're going to find, and I'm not going to go through this whole thing here. I'm just going to go through the objectives so you can see what we're talking about. The activities and financial statements of service and retail business. So think about what is the difference between service and retail business. So service, I'm going to go get my hair cut. I got to go get my car worked on, right? Those are service businesses. When we go, they provide a service. They change our oil or put new tires on, or I get my hair cut. I go to the dentist and get my tooth fixed, I get that, and then I leave, right? So now think about retail, because this chapter is about retail businesses and what happens in retail. So retail is basically what we all think of when we go to Walmart or Target or Walgreens or anywhere where we're buying products. So in general, those products in a retail establishment are made by a manufacturer, say like Procter & Gamble or PepsiCo or Coca-Cola, and then they're sold at Walmart or Walgreens or one of these places. But the difference, think about this now. So in our financial statements, if I'm just going to get my oil changed on the car, well, maybe they're giving me some oil or something, but we're really paying for the service to do that. Or get my hair cut is really even a better example, because I go there to get my hair cut. I'm not walking out with anything as far as something physical that I went in to buy like you would at a retail store. So where is the difference in the accounting? Well, in the accounting, and in fact, this is one of the things to keep in mind, is for most businesses, the two highest things that's on their expenditure list or in their what they have to pay for is, number one, human resource management or personnel. So, and especially in the service business, obviously, if you're going to the dentist or you're going to college, the highest expense that they have is for the personnel that are many times trained people. Doesn't necessarily have to be. You go to different places and maybe somebody's trained on how to change the oil in your car, but that might be different from going to a doctor for some type of procedure. However, the cost to the company is very high for service businesses for personnel, because that's really what you're paying for, is the expertise of the personnel. So now going back to retail. So think about retail. So if I'm a store like Walmart, yeah, we got employees there, and employees for big corporations that hire, hundreds of thousands of people like Walmart does, is extremely high for the company. But think about everything that's on the shelves in every single store. And the store's open from whatever time it is, could be even close to 24 hours in some places. Or even convenience stores that have stuff that's on the shelves and they're open 24 hours. But what the biggest cost is inventory, right? We got to buy all the stuff from somebody who manufactures it, typically a third party. Even whether you're going to an auto parts store or maybe even your sporting goods store, they're buying all these different products from manufacturers. If you go to the grocery store, they're buying food and groceries from other suppliers, and they're bringing it there to sell it to us. So one of their biggest costs in their accounting is inventory and keeping track of all of this inventory and how much is it coming in. So think about the job of an accountant is very important when it comes to keeping track of inventory. Now, we're going to have a chapter later on payroll. But for right now, we're talking about retail and inventory. And so we have to keep track of this. It's one of our major expenditures. So think about a business. If you're going to be in business, you need to think about, well, what is my top 5 expenses in business? And if you're a retail store of any kind, inventory is one of your biggest costs. So don't you think that it's important that you keep track of it correctly and appropriately and properly? And that's what this chapter is all about. And so as you go through this chapter, realize that there's a lot more to it than we think when we're just going to the store and buying something that happens to be there, because the store has to purchase it. And does, maybe if you open up a little shop in your hometown, and you're buying from, say, let's just say you're buying something from, I say Procter & Gamble or Unilever, because they supply just about all of our daily things, so shampoo and, toothpaste and everything else that we use on a daily basis. But if you're opening up a little store like this and you're buying from a company like Procter & Gamble or Unilever, you got a price that you pay. But wait a minute, what if you're Walmart or Walgreens or or Target or Costco, one of these major retailers that's all over the United States? Well, they may pay a different amount than what you do. Now, some of that is regulated by law on what the company can do. So what they do in return is they give discounts, certain kinds of discounts to circumvent any kind of discriminatory practices that's illegal, as far as what the manufacturer's charging the retailer. But so what do? They give you discounts. Now, what happens if you're the store? Suppose I'm the store and I'm buying stuff from a manufacturer, and it comes in. I've ordered all this stuff, and when it gets there, some of it's damaged, or maybe something's already out of date if it's a food product or something, and I got to send it back, and I need to get credit for that, right? I've already got the bill when I received it. Okay, I ordered, $500 worth of stuff, and when it came, some of it was damaged, or it was no good. It wasn't what I ordered. They sent the wrong thing. So you're a store that buys specific items, like, say, for example, I used to talk about car stuff, but anyway, we ordered tires to sell in our tire shop, and we ordered tires for a specific vehicle, and they sent us the wrong tire, right? So it wasn't that it was damaged or anything like that. It was the wrong thing, So there's those things that goes on. So I've got the material. The bill that we receive is based upon what I ordered. I ordered $500 worth of stuff, but now I've got the bill for $500, and I had to send back, $100 of that. So you got to account for that. There's also things that we're going to talk about. Payment terms, because what does the manufacturer want? They want cash flow. So they want us, typically, the standard might be 30 days to pay. So I've got my $500 worth of stuff. I got 30 days to pay them. But there's all these terms that you'll encounter as you're going through this material, where the manufacturer offers us discount if we pay faster. Now, again, if it's just me and I'm a small company or a small business, maybe that isn't enough to entice me, because I need my money in my bank account to use it for working capital. And the company that's providing the stuff, they want it in their bank account for their working capital, and they're going to give me a discount. Well, the discount is normally what we call 2% net 10. What that means is if I pay within 10 days of receiving the merchandise, then I get 2% off. Now, 2% may not be very much money. Again, if I'm talking about $100 in tires or whatever it is, or a tire for $100, really, then maybe that's $2. It's not worth it. I'd rather take the full 30 days to pay and still be within, my contractual agreement. But again, go back to big giant companies, Walmart, okay, we're buying, thousands upon thousands upon thousands of tires for our automotive centers in all of our stores across the world, maybe. And so when you start adding this up to like millions of dollars, whether that's tires or loaves of bread, it doesn't really matter. The point is 2% can really be a lot of money. And where I used to work when I worked in California at the county government there, we bought such huge volumes of different things. We always took advantage of the 2% net 10, because for us, it was really a big deal. So those are the kind of things we look at this chapter. How do I get stuff back to them? Now remember, accounting is all about keeping track of this. Maybe the person at the warehouse, they got it, it's damaged, we just sent it back, whatever. But in the accounting office, which may be in a totally different country, or a different place in the United States, and now all of a sudden I say, okay, well, we got the $500 we ordered, I got a bill for $500, but then we sent some of it back. I got to keep track of all this stuff, right? And then I also have to keep track on the other side. What happens when it goes onto our shelves? So now we've got it on our shelves. and then what happens in the store. Somebody pushes a shopping cart into the display and knocks it over and damages a bunch of stuff, right? Well, that's no longer stuff for sale. So because we can't sell it, it's been damaged, right? So is the manufacturer going to give us credit for that? Now, in some cases they do, and I don't want to get into that right now, but for the most part, it was damaged on our property, in our possession. We'd already maybe even paid for it, and now it was damaged on our property. Well, it's no longer goods for sale because it's damaged. So who has to take care of that kind of stuff? The accountants, right? The accountants got to take off stuff that's no longer for sale. What happens about stuff that gets stolen? Really theft. We got a whole chapter coming up on controls, what we call internal controls to prevent theft and things like that. But as far as retail stores, the largest theft comes from within. Most of the theft that you think about somebody running out the front door with a 12-pack of beer or something at the convenience store. But in reality, your stores like Walmart, Target, Walgreens, all of these major retailers across the United States, their biggest theft comes from their employees, because the employees kind of know the system. They know how they can get things out. And again, we got a chapter on some of that kind of stuff coming up too. But we're talking about retail. Keeping track of the inventory is very important to the business, because in most retail businesses, inventory is one of their largest, if not the largest, expenditure. So it's very important. And so that's what this chapter is about. And again, let me know if you need any help. Thanks.